If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Back everyone to another Hbar update. I have unfortunately cleared all the charts and all the technical targets, but we will run through them all today, so don't you worry. Today's update is talking about this huge weekly bullish signal that has just flashed on the chart, suggesting the beginning and very early developmental stages of the new bull market. So in today's update, it's pretty much a message to you to understand that we are so early to Hbar. We're so early in its process, just getting back to the all-time high, let alone the targets beyond that point. From today's current price of 7.67 cent, we are sitting at a 664% move until that all-time high, and can expect beyond that point, of course. So it's very exciting times, and I'm going to explain why we are so early today because of this because of the placement of where we are right now, and we're also seeing these bullish patterns forming, getting ready for this huge breakout. Please stay tuned, like, subscribe, comment and share so we can hit 7.5k subscribers before the end of this year. There's under 200 subs left. It's achievable. If you want me to teach you how to trade as well, predict where the markets are going and taking profits from them, then please use the links in the description. I've got an ebook, course, one-to-one mentorship plan and Discord community that I'll explain later on in this update. Now, the bullish patterns that we are seeing form already on the weekly time frame, which I've mentioned before and already targeted for you guys, is this huge weekly double bottom. Now, I know I'm using the 5-day time frame and you see this way more often than the weekly. It's because you get precursor signals on this chart, and it's also a chart that you have to unfortunately pay for. If you have the free version of TradingView, check out the free trial. If not, then just continue using the weekly time frame. If you have the paid for version, I would suggest using the 5-day. You can see right here, right now, this bullish signal has flashed and it's the bullish cross. Now, I've already made a video on VET today. I know a lot of you do not give an absolute toss about VET. That is totally fine. But the reason why I'm mentioning it is because Hbar, and you see almost every day with the updates, the Hbar videos and the VeChain videos have very similar titles. It's because they have very similar charts and they really do move together. And I know they've got nothing to do with each other, but it's just something that I've noticed happen for well over a year now. So what we are seeing on VeChain is this huge double bottom, but also on Hbar, as you can very clearly see. Now, the difference between those two charts is that we have already achieved the 200 EMA technical target once we had broken through the 20 and the 55, meaning that in the immediate short term, and again, 5 days is one candle, so immediate short term could be weeks or months, guys, but essentially when you reclaim those levels, you're heading to the highest point of this downtrend, because yes, we are in this bear market and we're setting up those huge bullish patterns to flip this into a bull market. You need some signs. The very earliest of signs that we've just got is this bullish cross on the 5-day time frame. Just imagine it as you're seeing a weekly bullish cross. However, if I scale over to the weekly time frame, you can see this signal has not yet actually appeared, with the 200 EMA also being a lot higher than the 5-day time frame. You can see as the 5-day period is much shorter than 7, then it's going to allow very quickly less candles are essentially needed to create a 200 moving average, because again, it's 200 candles. If we're taking 5 days instead of 7, this is going to appear a lot earlier, and so those bullish crosses and bearish crosses with so much meaning are going to be appearing a lot earlier on this time frame. So it's a precursor signal for maybe the weekly time frame, essentially. Now, we're seeing this double bottom right now. I will get you your technical target to the upside. You just need to place a neckline essentially on the highest body and go from the lowest point to the neckline, and then we can see once we do eventually break this, we got a 22-cent technical target, which from today's current price would be a move of around 190% for you guys, totally free on the channel. Of course, as a holder, you're going to achieve this anyway, but if you want to also, on top of your holding positions, use this as a short to mid-term investment and then take that out once that's up there, this is something that I was doing throughout the bull market, and what we tend to do in the Discord community. On top of our investments, we also like to short to mid-term invest trade, if you're understanding where I'm getting at. So yeah, using a one pump in two ways. Not only our investments will go up, but also our trades will go up, but using that trade as like an investment, a short-term one. So we need to break through this 200 EMA and neckline, otherwise this pattern and target won't be validated. And so right now, for me, it is very clear after this bullish cross was formed literally at the close of this week, so it's just appeared today essentially, and with that we need to continuously hold it. So if we now get this rejection, we've already seen the rejection, if we now start dumping, we need the 20 and the 55 1.5 to continue to hold, with the lowest point being at 6 cents. So a nice psychological level for you guys. 6 cent must continue to hold. We're 1.5 cent above that point. As long as 6 cent holds, we will see an eventual reversal and a break of the 200 EMA, validating this 190% move from today's current price. Now I'll check from the breakout, of course. This of course would be a 150% move, and now we need to look into where this is, because usually when we see a pattern, once the target is met, we reverse. So we need to now find on the chart why this is specifically a key level of resistance. Now we can look into the past and find supports and resistances, but there's going to be arguments on where specifically is that support. Is it right over here? Is it here? Is it here? Is it there? Is it there? So simply just use the fibs from our bull market top to bear market bottom, and not only is going to show you some key levels of resistance, but also future bull market targets. Now we can very clearly see that this huge weekly double bottom is going to take us into the golden pocket, and that is why we are so early, everyone. Because if we want to get to a point where all the people that know what Hbar know Hbar as a crypto, if you want all of them to agree that the bull market is here, if you don't want any arguments where, oh no, it's still bearish, oh no, it's bullish, trust me, no, it's bearish. If you don't want any of that nonsense, you need to create the reversal wave, and that is breaking above 22 cents. So the fact that we've got a bullish pattern just taking us to that location is showing that this is early. Why? Because this is a location where you're meant to get cents lower. Why does that make it bullish? Because when we break through this, we create the reversal wave. Before that point, we're just heading up into that location. So we know there's gains to be made even before we start to see a correction. Now, if I just move over to the side quickly and pull out a fresh chart, if I'm to draw a downtrend, it will not be a straight line down like this. We'll have our pullbacks where it pulls back and then continues, pull back and then continues. And every single pullback is into a golden pocket. So if I measure a move down around the halfway and a little bit higher than that, well, beyond the halfway point, sorry, there will be a golden pocket just like so. And then we're anticipating price to get into there, get a rejection for continuation to a new low. But understand, if we're entering a bull market, and this is our bull market top and bear market bottom, and that's the halfway point, or yeah, around there, the golden pocket. And if we're looking for a bull market, we need to eventually break through this to create the reversal wave for targets beyond the all-time high over here. So the only way in doing so is to create the reversal wave, and you need to flip this area into support for continuation higher. So when we're approaching that golden pocket, it's understandable to get a rejection, as you're meant to see a new low, lower than the bear market bottom. However, we're looking for a higher low, and then I'm going to go through that today with you guys, don't worry. And then from that higher low, we break through the golden pocket, flipping into support, heading over to the bull market target. So you need to understand that yes, there's a Fibonacci path, but it of course can get invalidated. And if we want to enter a bull market, we can't see a rejection that sends us to new lows below 3 cents. Please understand this. We need a higher low, and the most likely place that higher low appears is pretty much where we are at right now, just showing you how early you are, because there's still time to go up and come back down, and then we will eventually go up like this. Okay, so it's a long process. This could still take a year, 2 years to get to our bull market targets, and along the journey it's going to be a very rocky road, but as long as you're following along with the channel, it's going to be all calm. So make sure you have liked, subscribe, comment, share, turn on that notification bell on if you want to as well. And I do also post further updates throughout the day on my Twitter, Louis_crypto, but again, there are fake accounts, so use the links in the description. Now, okay, let's explain this over here. So as I just mentioned, as I just did on the clear chart. So we've got this big wave down. You're pulling back and looking for continuation low, but we know when we're entering a bull market, that is not going to be the case. We've got this bullish signal that's only appeared once in the past, and you can see that led to a bull market when the bearish cross happened, bear market, bullish cross, bull market. Bull market is higher highs and higher lows. It's just an uptrend. Forget this bull market, bear market nonsense. When we're talking about a bull market, it's because the weekly time frame is in an uptrend. So it's just an uptrend, a bull market. It's just depending on what time frame you're using. But when we say bull and bear market, it's because the weekly is either bullish or the weekly is bearish. So we're looking for the signals on those charts. And on those charts, the higher time frames, the higher, more accurate it becomes. We've now spotted this bullish cross that's only appeared once in the past and gave us thousands and thousands of percentage gains. We're looking for similar things right now, but there is a key level that's standing in our way. However, once that is broken, not only are we flipping this into an uptrend because we're reclaiming the 200, but we would also have a target out of this double bottom taking us to the golden pocket, which is a point of rejection. So I would anticipate us falling back down to the double bottom neckline or wherever the 200 EMA lies once we do start heading down. And then that needs to hold for an eventual reversal wave creation, flipping this key area into support, where we will target between $1.24, $1.85 and $3.26, which I believe these are more likely to happen than that final one. If it does get up there, I will make, of course, videos in the future where we are targeting but $3. However, for the moment, I'm looking between $1.25 and $1.85 for our future bull market targets. And all that explanation should help you understand that we are so early into this. There's a lot of struggle along the way up because we'll be making gains and it'll be taken straight back away from us. Because look here, from today's current price to there's a 190% move, but coming back down to where we are, it'd be a 60% minus. So it's going to be a bumpy road ahead, but don't worry, as long as you're staying tuned with the channel or even learning from our education, whether that's the ebook, the course, the mentorship, or just the Discord community for those weekly group calls, as well as knowing what my portfolio is, then you're all going to be okay. Just use the links down below or continue to watch these videos daily. Thank you so much for tuning in. Like, subscribe, comment and share, and holders, get ready. I've got a whole bunch of educational content, and over here on the website you can see loads of other people taking action recently. If you want to get educated, simply scroll underneath the video, click take action or Linktree, and click the option that you want to read more about, or private message me on Twitter. Let's start off with the ebook. This is where you can take action on my ebook, teaches the exact strategy. Head over to the membership level if you want to become a Discord channel member, where you have access to 2 weekly group mentorship calls. Or if you want to take action on my 6-hour long pre-recorded course, there's an offer here, and you do get Discord chat for 2 months totally free. Here is my beginner one-to-one mentorship plan, which includes 3 hours of my one-to-one help, the course, and 2 months free in the chat. And there are some other plans here for 5 or 10 hours of my one-to-one help. Use the links down below to private message me on Twitter, or head straight to the website using one of these links to take action. Cheers.